Welcome to The Explainer, where we break down the big stories behind the numbers. And today, we are definitely talking about a big number, all centered on one company, SoundHound AI. That's right, a 20% jump in a single day. A move that massive always gets people talking, and it always brings up that one big question. What in the world is going on here? Is this just a flash in the pan? Or is something bigger, something more fundamental, actually changing? And that really is the million-dollar question for our explainer today. For a while, this stock looked like what traders call a falling knife, and you do not want to try and catch one of those. But then, boom, a 20% surge just flips the whole story on its head. So let's dig into the analysis and see if this is just a momentary blip or a real, honest-to-goodness trend reversal. Okay, so to really understand a move like this, we've got to start at the beginning. Before we get into any charts or trading strategies, we need to know, what does SoundHound actually do? What's the business that's getting investors so fired up? Well, SoundHound is a big player in conversational and voice AI. I'm talking about the tech that lets you talk to your car, your TV, or even the drive-through speaker at a fast food joint. They're involved in a few key areas. They have this agentic AI platform for businesses, they're big in the auto industry, and they even do AI that works right on a device, no internet required. But here's where it gets really interesting. Look at where the growth is actually coming from. A whopping 70% of it is being driven by that agentic AI platform. We're not just talking about understanding simple commands here, we're talking about an AI that can handle complex, multi-step tasks for a business. This right here, this is their powerhouse. And this quote from the source material just nails it. They are shifting from being just another voice assistant to becoming an action engine. What does that mean? Well, think about it. An assistant might hear you say, "I want to order a pizza." An action engine goes ahead and actually places the order, processes the payment, and gets it delivered. It's a huge, huge difference in capability. And of course, the market loves this because the company is putting out some pretty impressive numbers to back up the vision. They're guiding for revenue in 2026 to be somewhere between $225 and $260 million. That kind of confidence, that kind of forward-looking statement, that's exactly the kind of thing that gets investors really excited. Okay, so a promising business model and strong guidance, that's all great stuff. But it doesn't totally explain a 20% spike in one day. Why the huge move right now? Well, for that answer, we have to shift gears from the company's fundamentals and look at the technical signals on the stock chart. First up is this idea of a resistance level. For a while, the stock really struggled to get past this $7.10 mark. Just think of it like a ceiling. Every single time the price got close, sellers would come out of the woodwork and push it right back down. It was a major psychological barrier. And this is why that recent surge was so important. The stock didn't just tap that ceiling, it blew right through it. And in the world of technical analysis, there's a classic saying: an old resistance level often becomes a new support level. In other words, the old ceiling just became the new floor. That is a classic, textbook bullish signal that the trend might be changing for good. But it's not just that one signal, The analysis points to a whole bunch of other signs all lining up. The MACD, which is just a fancy indicator for momentum, it turned positive back in April, kind of hinting that a move was building up. And this is a big one. Trading volume is surging. That tells you that big players, probably institutions, are behind this move. It's not just random market noise. So with a huge price move like this, you get sky-high volatility. Now, that can be scary for sure, but the source material we're looking at highlights a specific strategy that some traders might use to actually take advantage of all that choppiness. So how would someone approach this kind of situation? The strategy is called a cash-secured put. Now, that might sound a little intimidating, but let's break it down. It's an option strategy where you sell someone the right to sell you a stock at a price you choose by a certain date. The cash-secured part is important. It just means you literally set aside enough cash to buy the shares if you have to. So what happens is you end up with two possible outcomes. Outcome number one, the stock price stays above your chosen price. If that happens, great. The option just expires and you get to keep all the money, the premium, that you were paid upfront. Free money. Outcome number two, the stock price falls below your chosen price. In this case, you're forced to buy the shares, but remember, you're buying them at the price you wanted anyway, and you still keep that premium, which makes your actual purchase price even lower. So let's look at a real-world example from the analysis. A trader could sell a put option with a strike price of $7. For taking on the obligation to buy the stock at that price, they could collect somewhere between 55 and 65 cents per share immediately. So think about it. They either get paid to wait for the stock to go up, or they get an opportunity to buy a stock they already like at an effective price well below $7. And that really brings us to the final thought-provoking question that this whole analysis leaves us with. It's all about a trade-off. By selling that put, you generate immediate, guaranteed income. But in exchange, you're accepting the potential obligation to buy a stock that is, let's be honest, pretty volatile. So, is that risk worth the reward? That's the core decision at the heart of this entire strategy.